What can really change your financial life? Imagine this. You have just $10,000. Not much, right? But what if I told you that, with a simple and consistent strategy, you could turn that amount into tens of millions? When I say this, people often think I'm crazy or something like that. Let me start by going back in time. The year was 1942. The United States was in the midst of World War II, and the news was devastating. Headlines of defeats, uncertainties, and chaos filled the news. Pessimism was rampant, and fear gripped people. Now, why does this matter? Because it's precisely in such moments that extraordinary decisions can be made. I was 11 years old and had saved a few pennies over the years, the equivalent of $120 today. I decided to invest it all in shares of a company called City Service Preferred. It was my first investment, and I was excited. The next day, my father bought the shares for me. Guess what happened? As soon as we bought them, the price dropped. There I was, losing money right from the start. You know what that taught me? That the market is unpredictable in the short term, but, more importantly, I learned that patience and a long-term perspective are key to winning. Now, let me pause to ask you, have you ever felt anxious to act quickly, perhaps influenced by news or other people's opinions? Be honest. We've all been there. But the truth is, success in investing is not about reacting to what's happening now. It's about having a clear and consistent vision. Back to the story. I held on to those shares for a while, but as soon as they went up a few dollars, I sold them. I made a $5 profit. I thought I had made a brilliant move, but you know what happened to those shares? They went up to over $200 in the following years. That was my first encounter with the concept of patience, or rather, the lack of it. It was a powerful lesson. Investing isn't about chasing quick gain. It's about believing in the future and letting time do the heavy lifting. Now, imagine that instead of selling those shares early, I had invested $10,000 in the S&P 500 index and simply left it there. No touching, no panic, no listening to financial gurus. Do you know how much that would be worth today? $51 million. That's right, $51 million. And what would I have done to earn that money? Absolutely nothing. I would have simply trusted in the ability of the American market to grow over time. This isn't magic, it's simple math. Companies work hard, innovate, grow, and their value increases. And when you invest in them, you grow along with them. You don't need a degree in economics or special skills, you just need patience and discipline. Now, let me make a comparison to really drive this point home. Suppose that instead of investing in the market, you had used that same $10,000 to buy gold. Gold doesn't do anything. It doesn't grow, doesn't produce, doesn't create jobs. It just exists. If you had bought gold in 1942, do you know how much it would be worth today? About $400,000. Sounds good? Maybe. But compare that to the $51 million you would have had by investing in American businesses. For every dollar gold gave you, the market would have given you over 100. The difference is staggering. And yet, so many people chase gold. Not literally, but things that seem safe but produce nothing. They avoid productive investments because they're afraid. Afraid of headlines, afraid of the next crisis, afraid of the unknown. But let me tell you something. Crises come and go. They always have. Wars, recessions, pandemics. The world has faced it all. And yet, people, businesses, innovation, and progress have prevailed. What you need to understand is that investing isn't about predicting the future. It's about believing that, over time, things tend to get better. And if you're invested in productive businesses, you'll be on the right path to reap the rewards of that progress. Now, I know what some of you might be thinking, but Warren, I don't know anything about the stock market. I don't know how to pick companies. The good news is, you don't have to. The beauty of an index fund, like the S&P 500, is that it does all the heavy lifting for you. It simply brings together the 500 largest American companies, and you become a part owner of each. It's like buying a piece of the American economy. And believe me, the American economy is resilient. Fear is one of the greatest enemies of an investor. It makes you sell at the wrong time, hesitate to buy when opportunities are shining right in front of you, and listen to any expert shouting that the world is ending. Fear paralyzes, but information empowers. Remember the story I shared about 1942? At that time, everything seemed lost. The war was real, the losses were frightening, and the market reflected that panic. But here's the thing, there will always be bad news. There will always be something that makes us question the future. The difference lies in how we respond. Do you give in to fear, or do you use it as a reminder that great challenges create great opportunities? You see, the secret isn't ignoring risks. It's understanding that every crisis follows a natural cycle. Fear takes over, prices fall, but the world moves on. People continue living, working, creating, businesses reinvent themselves, and the economy recovers. Always. It's not a question of if, but when. Let's return to that example of investing $10,000 in 1942. Most people would have hesitated because of the frightening headlines of the time. But what if you had trusted the market's potential, the power of human progress? You would have multiplied your money hundreds of times. Now, apply this to your own life. How many times have you let fear stop you from taking an important step? How many opportunities have you missed because you were paralyzed, waiting for the perfect conditions? Let me tell you something you might not want to hear. The perfect moment will never come. There will always be doubts, uncertainties, and reasons to hesitate. But financial success doesn't wait for those who hesitate. It rewards those who have the courage to act, even when the outlook seems uncertain. And to reinforce this, let's compare the market to gold once again. Gold is a passive asset, while the market is an active engine. When you invest in companies, your money is helping to create products, jobs, innovation. It's participating in growth. Gold, on the other hand, just sits there. It doesn't grow, multiply, or contribute. It's the difference between planting a tree that bears fruit every year and locking away a precious stone in a vault. Which do you prefer? This brings us to another essential point: consistency. It's not about investing once and forgetting. It's about developing the habit of investing regularly. If you buy a small piece of the market every month, regardless of what's happening in the world, you'll be building long-term wealth. It's that simple, but people complicate things. They try to time the market, guessing when to get in and out, as if they were masters of predicting the future. Let me be direct. No one can do that consistently. Not me, not the world's greatest investor. That's why the most powerful strategy is simple: buy and hold. Stop trying to guess and start trusting. And if you need more proof, here it is. Over the last 50 years, the American stock market has faced oil crises, tech bubbles, real estate collapses, and global pandemic. Yet it kept growing. Why? Because people kept innovating, businesses kept operating, and the American economy kept advancing. That's the power of a productive asset. Now, let me address something that might be on your mind. But Warren, what if I make a mistake? What if I pick the wrong company? Here's the beauty of index funds. You're not betting on a single company. You're investing in a diversified group of companies. If some fail, and some inevitably will, others will make up for it. It's like planting an entire forest instead of relying on a single tree. And here's the final point I want to drive home. You don't need to be a genius to do well as an investor. You don't need an MBA or years of experience. All you need is a simple and consistent philosophy. Invest in productive assets, trust the long term, and ignore the distraction. What you really need is the discipline to keep moving forward, even when emotions try to pull you down. Now that we've discussed the importance of trusting the long term, ignoring the headlines, and investing consistently, I want to address a common obstacle many people face: self-doubt. That voice in your head that asks, "But what if it doesn't work for me? What if the market crashes right after I invest?" Here's the secret. The market doesn't reward perfectionism. It rewards action. Think about the countless opportunities you've missed in life because you were waiting for guarantees. Be honest with yourself. Have you ever seen anyone build an incredible career, a strong relationship, or a fortune by waiting for the perfect scenario? No. Great achievements come to those who take action, even in the face of uncertainty. The same applies to investing. Of course, there will be times when the market drops. That's inevitable. But do you know what else is inevitable? The market recovering and continuing to grow. History has proven this time and again. So, the real question isn't what if it crashes? But am I willing to wait and reap the rewards when it rises? Let me share a powerful metaphor. Investing is like planting a seed. At first, you don't see much progress. You might even wonder if anything is happening underground. But over time, that small seed sprouts, grows, and transforms into a lush tree. However, this only happens if you resist the temptation to constantly dig it up to check if it's okay. Patience is the fertile soil where wealth grows. Speaking of patience, I want to emphasize the importance of ignoring market noise. It's not your job to predict the next crisis or the next boom. Your job is to stick to a solid strategy, no matter what's happening around you. It's like crossing a bridge on a windy day. What do? You keep walking. You don't jump into the river just because things got turbulent for a moment. Here's another critical point: the power of focus. Many people fail because they get distracted by promises of quick gain, speculation, hot tips, get-rich-quick schemes. They're all traps. The true path to prosperity is boring, repetitive, even predictable. But it works, and in the end, that's what matters. Here's one last piece of advice. Don't do this alone. Find a mentor, read about great investors, surround yourself with people who share this long-term vision. You become the average of the people you spend the most time with, so choose your company wisely. And when in doubt, remember, you're not just investing money, you're investing in a future. A future where fear and uncertainty don't dictate your decision.